Hello, everybody. It's Greg Kostroff, the Bearded Realtor, coming from you from Realty Concepts here in Fresno, California. Today, I'm with my friend and lender, Corbin Claypool. And today, before we get going, we're going to talk a little bit about Corbin and what is up with life with him. And he is a lender here in Fresno, and I want to educate you guys on the market. What is creating the interest rates up and down? And we want to answer those questions along with down payments. How much money you need how much money you're going to need when it comes time to buying your home. But anyway, before we get to all that good information, I'd like to introduce you again to Corbin. And Corbin, welcome.
Yeah, thank you for having me.
No, I'm really excited. So tell me a little bit, first of all, how long have you been doing loans?
It's going by way too fast. Almost 8 years now.
8 years?
Yeah, 7, 8 years, I think. Yeah, it started 2018 is when I really kind of like locked in.
Mm-hmm.
So I'm thinking actually maybe 7 years now. 7. Yeah.
Okay. And how young are you?
I'm 33.
Okay. So you were doing this. So what you started about what?
26.
Okay.
Yep.
What did you do after high school?
So after high school, I moved. Well, I was already in San Diego, and I was a personal trainer down there.
Okay.
And just kind of being dumb, just making bad decisions, but having fun at the time.
All right.
So yeah, that's basically what I.
Were you raised here in the Valley?
Yeah, raised in Fresno. Went to Mountain View Elementary, then Alta Sierra, and then ended up at Buchanan.
Okay.
And then ended up finishing high school in San Diego.
Oh, so you moved out to finish school?
Yeah, so I was getting in some trouble here when I was at Buchanan, and my dad came, picked me up, and said, "You're coming to San Diego because I'm not going to let you be around this group of people that you're with." And so I ended up finishing school down there.
Okay.
So, yeah.
So what years were you in high school down there?
2010.
But yeah, I'm sorry. Your senior year, how many?
Oh, just the end of the senior year.
Okay.
Yeah, so I played water polo all 4 years of high school, and it was only until the end of the year that I ended up falling in like a bad crowd, so to say. And man, a lot of these guys are good guys now, hard workers and stuff. We were just all making dumb decisions, and so that's basically how it went.
That's interesting. I now remember because we got together several years ago, just had some iced tea together, and I think you did tell me you played water polo. I played water polo. You probably did. Yeah,
I don't remember that. Yeah.
Water polo and swimming was So in fact, lately I've taken up swimming in my pool, doing laps, and where I'm up to 40 and 60 laps at a time.
That's good.
Yeah. So I and every stroke I take, I think about high school. It's taking me back in the times that I was a swimmer in the pool. And so it's kind of bringing back a lot of memories, but that's pretty cool. So, okay. So you're a Clovis boy.
Yep.
You got yourself in trouble.
Yep.
Do you want to say what kind of trouble that was? You don't have to, but I mean.
Yeah, no, I mean, just.
That your dad would pick you up and take you out?
I was basically running away from home and just living with friends and all sorts of stuff like that. And we weren't doing like hard drugs or anything like that, but just at the time kind of smoking a lot of weed, and not showing up to class. I ended up being a real bad kid at the end, which is crazy because my whole life I was always in AP classes, honors classes, and then it was just at the tail end of my senior year that I kind of spiraled down a little bit. So
do you know what was causing the spiral? What was going on at that time in your life that you were checking out? Sounds like you were numbing yourself somewhat.
Yeah. I don't know really. I think it was just maybe like home life, and
were your parents separated?
Yeah, parents were separated. Dad had moved to San Diego, and so that's kind of what was happening there.
Did you have siblings?
Yeah, I have a little sister.
Okay.
I've got an older sister. I've got an older brother, and then I have 2 stepsisters.
Okay, you come from a big family then.
Yeah.
All right. So I know you're married.
Yep.
You have a couple sons.
Yep, 2 sons.
And how long you been married for?
We've been married now. Oh God, this is to be on camera.
I hope your wife doesn't. Yeah.
No. We've been married for 6 years.
Okay.
7 years. We've been together almost 10.
Oh wow.
Yeah.
Okay.
So
very good. And where did you meet your wife?
In high school, actually.
Here in Fresno.
Yeah, we actually dated when we were
for Clovis.
Yeah, we dated when we were 16. She was 15, I was 16.
Wow.
So we actually, when I did that little tournament this weekend, we went back to the lockers, which were all gone. They had taken all the lockers out, and we took a picture by the lockers where we took our first picture together.
Wow.
So, yeah.
Well, I know your family has to be one of your most important accomplishments in life, right?
100%. Yeah.
Yeah, your children and everything. So we know that. With that, what is the next accomplishment in your life so far that is dear to your heart?
Yeah. I feel like just like me as a person, how much I've grown since, 24, 25. Really like I locked in and I kind of made the decision to basically, okay, I'm going to improve. I'm going to figure out what I need to do, and then that's at the same time that my wife and I got pregnant. And so my back was against the wall. I was like, okay, we got to make this happen now, And so I think God brought me through a lot of that. And, I struggle every single day, right? Like I'm not a perfect Christian at all.
Yeah.
But, I feel like my faith has gotten a lot stronger in the last couple of years for sure.
Okay.
So, and then of course, my business and stuff. I love my business and where we've gotten it.
So you talk a little bit about your faith. Were you raised in a faith-based family? I know you said your father took you to San Diego. What was the change? When did the change started happening for you that you came back to the Valley? What improved and what was surrounding that?
Yeah. So that's a really good question. So I had moved to San Diego and just kind of like, I wasn't doing a whole lot really. I was going to college, but like half butt, wasn't really fully committed to going to college.
Doing it because that's what people do, right?
Exactly. That's what I was told to do.
Yeah.
And then there came a certain point when I can't remember exactly how it happened, but my grandpa was like, come live with me. And so I moved back to Fresno and lived with my grandpa. And he was a hardworking man. He owned a roofing company, roofed his whole life, just like hard dude,
Yeah, he worked with his hands.
Yeah, exactly. So, and I was kind of a lazy dude at the time, right? And so I moved in with him, and I just remember thinking, okay, I'm going to be able to sleep in, be back in Fresno. He had me up at 6 a.m. fixing fences. He always had something going on at the time because he was trying to help me, at the time.
Yeah.
At the time, I hated it. At the time, I was like, dude, like, lay off, But now I look back, I was like, he was trying to help me become a man at the time,
So love that.
Yeah, so was in Fresno and then moved back to San Diego, and that's when I became a personal trainer.
Okay. And you still like training. It looks like you've taken up some type of wrestling or something, it looks like?
Yeah, jiu-jitsu. So I've been doing that for a couple of years.
Okay.
I was doing it like off and on. And then my buddy Jeff Shields, who opened up Superior Jiu-Jitsu, I've been pretty committed to it since he opened that up.
Okay. So why do you enjoy working out? What is it about you that you continue to work out, keep yourself healthy and shape? What does that do for you? What is the purpose and why do you do it?
You know what? So I always lifted weights since like 18, 19. And I really enjoy that just to stay fit, and it helps with the mental stuff. But one thing I've really taken a liking to with jiu-jitsu is my whole life I've always been an athlete. I'm not some D1 or high-level athlete, but I was a decent athlete growing up. And you always had that team camaraderie and all that, which I'm starting to like get more in jiu-jitsu. So it's kind of like brings me back to that. And I'm like, okay, where else can you get that at my age?
Yeah.
And so that's what I really love about it. Like this last weekend I did a tournament and I did my match and it was fun, but really what I loved is
Did you
watching.
win? Wait.
Yeah, I won. Yeah,
okay. Got to tell everybody that.
Yeah. I won by points the first one. I had the same guy in my division. So we went twice and I won by points the first time. And then I won by an Americana lock on the second time. Okay. Which,
Now, I know we're not here to talk about jiu-jitsu. I can't even say that word, but I hear it all the time. What is that? What type of wrestling is that, or fighting, or what is that?
It's a submission grappling, basically. So, your rear naked chokes, your triangles, your Kimuras, your Americanas. It's similar to wrestling in the sense that it's very like physical and grappling, and you're doing takedowns and that type of stuff. But it's different in the fact that you're submitting people. So, like when you put them in an Americana, obviously you don't want to do this to somebody. But if you keep cranking it, their shoulder is going to break. So they're gonna tap. Right?
Wow.
So that's kind of what.
And not that we have that figured out in why, but from beginning of a childhood, boys love to wrestle.
Yeah.
And what is that? I wonder. One day we got to figure out what is it that you're in your 30s and there's something about that.
Yeah.
What do you think it is for you? Why do you enjoy doing that?
It's just fun. I don't know.
Fun, huh?
Yeah, it's just a lot of fun.
Do you get a rush or?
Yeah. I mean, that was my first tournament, and Jeff really pushed me to do it because I didn't want to do it. It's just kind of a hobby. And I was like, I'm good, Jeff. I'm good.
Yeah.
And then we're sitting in line on our competition class, and I was just going to the competition classes to work on my cardio and get fitter because they're really hard. It's like an hour long of cardio, hard work. And he goes, "All right, who's competing?" And they all raise their hand. I'm not raising my hand. I'm just like, okay. He goes, "Corbin, are you going to compete?" In front of everybody. I was like, I don't know. And then everybody starts going, Corbin. So I signed up. I got pressured into it, but it was a good thing. I'm happy he pushed me.
Yeah.
And it was a really big adrenaline rush. So you asked about the rush.
Yeah.
So it was a really big adrenaline rush, but yeah.
Wow. That's interesting. Yeah. It's kind of like they pushed you over the diving board, right?
They 100%.
I remember standing there so scared as a kid, and then here you go. Yeah.
Yeah.
Well, good.
Yeah.
Well, hey, we're here to talk a little bit and educate our audience on loans, and a little bit what I want to cover today with you, and maybe you can help educate us, is we have a lot of buyers sitting on the fence. A lot of buyers are saying, "Hey, the interest rates are too high. They're waiting for the interest rates to come down." We've heard recently that the Feds are going to lower the rate, which they did a 0.25%, and they're going to lower it a couple more times. But our interest rates, financing rates, went up. Can you explain to us what are they talking about? What is the difference? Why are ours not coming down? And what needs to happen in order for those rates to come down? So I'd like you to kind of cover that with the audience a little bit.
I will do my absolute best to answer the question. Typically, when the Fed or when the mortgage companies and the investors and all the institutions know that rates are going to come down, they're going to typically kind of bake it in there. So we saw rates actually come down a little bit beforehand.
Yes.
And then when the Fed fund rate came down, we actually went up a little bit. I think if we went, because the Fed fund rate dropped 25 basis points, if it would have dropped 50, you would have seen a probably drop in the rates, but they were expecting 25. So then it just went up a little bit, and now it kind of settles around here. And I could butcher this. I've studied this quite a bit, but I always forget like the small minutia. The biggest factor in rates is basically buying mortgage-backed securities, and then like the stock market. So when investors are moving their funds from stock market into like a safer investment, like a mortgage-backed security, or they're moving it from like a mortgage-backed security into more like an aggressive investment, that can change interest rates and where they fluctuate.
Okay.
And then stuff with the economy, right? Because something happens in the economy, people get scared and they go, "Oh my gosh, I'm going to pull this money out of my index funds or whatever that's getting me 10% because it's going to drop. I'm going to put it into mortgage-backed securities. That's a safer investment at like a 4 or 5% return or whatever it is." So that's.
So your opinion, if inflation goes up or down, does that affect our interest rates?
Yes. So if inflation is continually going up, oh my gosh, I always have to like look and remember this relationship. But if inflation is going up, then they're typically gonna raise interest rates to stop the inflation. Right?
The spending.
Yes, the spending, because obviously if the rates are really low, people are going to be spending money in the economy, putting a bunch of money in the economy, and then inflation is going to rise.
Yeah.
So that's why rates came up, because inflation was so high. So that's another part of it. There's so many different factors in it, right? It's inflation and the mortgage-backed securities and the economy and all that. That's why people go, "Hey, are interest rates going to come down?" It's like, dude, we don't 100% know. There could be a war that happens and that changes everything.
Yeah.
So
I don't know if it was about 6 months ago, our interest rates got up to about 7.1, I remember, and then they came down, they were coming down. They got down to like 6.3 5.39, whatever, maybe a little bit lower. And then all of a sudden they dropped below 6 for like a day or two. It's like 5.99, I think.
Yeah.
And that's when they dropped the rate. And then all of a sudden, boom, now we saw 6.39. We saw 6.49 now. Where are they in the last couple of days?
I'm noticing the government loans are definitely in the 5s.
And those are the FHA, right?
FHA and VA loans.
Okay. VA
mid 5s, high 5s. You can get into the low 5s, maybe with a buy down. And then the conventionals, they can be in the 5s too, depending, right? If you're putting a smaller down payment, the rate's going to be a little bit higher. If you're putting a bigger down payment, the rate's going to be a little bit better.
Mm-hmm.
But mainly between, 6.125 to 6.375, maybe 5.99 or 5.875 if you're putting a big down payment.
Okay. So we talk about FICO scores, knowing that the higher the FICO score, the better rate you can get, right?
Right.
So if what is our FICO score, a credit score, need to look like to get the best rate possible?
Typically 740 plus.
740 plus.
Yeah.
Okay.
So a lot of people go, oh man, 800. It doesn't really make too much of a difference. There are some investors that will give bonuses for that, and we can see it in our little pricing adjustment screen. But how it works is it goes by brackets. So a 700 credit score is no better than a 717 credit score because it goes 700 to 719. That's one bracket.
Okay.
Once you hit 720, you're in a brand new bracket. So 720 to 739.
Yeah.
Then 740 and then up.
Yeah.
And then again, there's some lenders, very few of them, that say, okay, if you have a 760 or 780, we'll give you a little bit of a better adjustment, but most cap out at 740.
Okay. So for conventional financing, you want to be, you want to be, of course, over 700, but what's the low end of getting
the actual lowest that you can go is 620.
Okay, 620.
Yeah.
Okay. And then for FHA?
580. You can go lower, but it requires a manual underwrite.
Okay.
Which I probably bore people if I go into that, but it's
Yeah.
a little different. 580 is typically the lowest that you want to be.
Okay. So, see, I couldn't quote this until now. So if you're going FHA, if I have a 580 or above, I can approve for a loan depending on the debt ratio and everything else. But with a FICO score of 580 and above, doesn't give me the best interest rate, but it will get me into a loan.
So you'd be so surprised, actually. I've got clients that we have a lot of different investors that we can choose from. And Mr. Cooper has a special pricing for people between 580 and 620. So they get
awarded for having lower?
It's crazy. Well, I guess Mr. Cooper just wants those loans.
Ah.
So they'll price it a little bit better so I can get them a 6.25 out of 580 FICO score with very little points, which is pretty dang good.
Yeah.
For
Okay.
So,
and FHA loans, well, and then back to conventional, I heard you say 620 and above if you want to make that conventional financing, right?
Right.
But each one of them has a different down payment. And we were going over some information here in the California Association of Realtors that it's really interesting depending on the age bracket of people that are educated or not educated about how much money you can put down. And it seems like average anywhere from 50 to 66% of homeowners are not, or the population, let's just say, are not aware of how much is needed to put down.
Which is crazy.
Yeah, it's crazy. Here in California, that is.
Wow.
So let's educate them. If I'm getting an FHA loan, I'm a first-time home buyer, how much do I need to save in order to buy a home? Level entry buyer, FHA.
Without down payment assistance.
Well,
but we'll do both.
Yes.
So FHA minimum down is 3.5% down
of
the purchase price.
Okay.
And then you have, closing costs that can be 2 to 3% of the purchase price. Roughly,
okay.
Right?
Okay.
So you need to come in, if you're coming in with your own cash to close, let's say it's a $400,000 house. You're probably going to need anywhere from 25 to 30.
Okay.
For that house.
On a medium price range right now is right around 425 in Fresno. So if we do a $400,000 purchase FHA, how much are you saying they probably need?
Probably 25 to 30,000 when you account for your down payment, all of your escrow, lender fees, appraisal, impound account, all that different stuff, insurance. So
I know VA is a little different, but speaking of FHA, can I get a loan with no money down? It seems like we have a lot of buyers out there that have the credit scores, that have the income, their debt ratio is good. they haven't saved money. So can I get in without any money down?
So this is the silver lining in this market, right? We're not in the 2021 market where there's, and you saw it, 30 people trying to buy one home.
I know.
You are not getting credits on that. You're not
Yeah.
getting down payment assistance on that. But homes right now, there's maybe some homes that have been sitting a little bit longer. So you have the opportunity to ask the seller for closing cost sometimes. And then we can pair that with a down payment assistance like a Cal Hafa or a GSFA Platinum or a Chinoa. And that will cover your down payment. We have the seller covering your closing costs. We just did 3 or 4 clients this month where they came in with no money down.
No money down.
That's the silver lining in this market right now.
And that was FHA.
That was FHA. And we have a couple conventional, because conventional also has down payment assistance, 3% down. Then you pair it with the down payment assistance program. So,
and so if somebody's listening to this and they're thinking, well, what is it about this market that you can do that? It's, well, houses are staying on the market longer than they were in 2021. You put out that you had a listing in 2021, you had 5 offers in the first hour or two, right? And they were 20, 40, 50,000 over asking. And this market where the interest rates, and what was the interest rates back then?
3%.
3%. So now we're at 6.5, let's just say.
Right.
Houses are sitting on the market longer. So now with the right realtor, you can hopefully negotiate with that seller to pay for closing costs. And the right lender to help you get those loan programs. And you mentioned a few of them. Some of them I've never heard of. But what is the most popular one?
I would say the 2 most popular, at least that we do, other people may say something different, is GSFA Platinum and Cal Hafa.
Okay.
The coolest thing about GSFA Platinum is that if you're a nurse, police officer, firefighter, basically anybody in that sort of field, nurse, you qualify for the GSFA Platinum Select, where we can get you your down payment assistance, and then we can also get you up to another 1.5% in money that we give to you that you don't have to pay back.
Wow. So you don't even have to pay those grants back, is what you're saying. Do they have to live in it for a particular time?
You know what? I actually don't know about that. I don't think so.
Okay. So you talked about nurses, firefighters, police officers. What else?
You said firefighters, EMTs, anybody that is in that sort of heroes line of work, teachers. Yep.
So there's programs for them.
Yep.
And what did you call that program?
That's the GSFA Platinum Select.
Okay.
And so they'll get 3.5% that they do have to pay back, and then they can get up to another 1.5% that they get given to them. Okay,
great. And then what the FHA, where they're not a teacher or a nurse, whatever, what is that program look like?
So you have
Cal Hafa.
Yeah, you have Cal Hafa, but GSFA has 2 options. So you have the Select, and then you also have just the normal GSFA Platinum. That would be for everybody.
Okay.
But those funds they have to pay back.
Yeah.
And then there's also Golden Opportunities. That's more flexible on credit score. So usually most of these programs require 640 credit score to qualify for them. Golden Opportunities goes all the way down to 620. And it goes up to a higher debt to income ratio. Most of them have a cap at 45 or 50%. This one goes all the way up to 55. So it's a good program. And then Cal Hafa is basically same thing, but different, right?
Yeah.
Cal Hafa, you don't have a monthly payment on.
Okay.
It's a silent second.
Okay.
Versus GSFA, you have a payment on.
Okay.
So some people don't like that payment because it ups their payment by maybe $80 to $150. And in that case, we can maybe look at a Cal Hafa for them, where they have a silent second that they don't have to pay. That they do have to pay back, but don't have to make a payment on it.
So you can either get in with no money down or minimum that 25 to 30,000 down that we spoke about. That's if you're getting no programs at all, right?
Right.
So is there income limits with those? If you're a firefighter, let's take the first one, firefighter, nurse, teacher, is there income limits?
So Cal Hafa has really good income limits. I believe it's like 174,000.
Oh, that's high.
So it's high. GSFA Platinum on the FHA side has no income limits.
Okay.
So that's pretty awesome. GSFA on the conventional side, though, because you can pair them with either or, does have income limits. And I think it's the area medium income.
Okay.
I have to double check on that.
Okay.
So.
Okay. So why wouldn't somebody buy right now? What is, we get a lot of buyers get scared off on that interest rate, 6.5 right now. Even though they can approve it, approve for that, and maybe they could even make that interest rate, with their debt ratio and everything, they can make the payments, is what I meant to say. They're still sitting on the fence. Why? What would you tell a buyer who's saying, well, I'm going to wait till they get down to 4 or 5%?
Yeah, I like to just show them the facts. Like, let's look at historical appreciation and what happens to homes, because sometimes, unfortunately, they have somebody that means well in their corner telling them it's a bad time to buy.
Yeah.
And
sometimes,
and
it's who they're talking to.
Yeah, exactly. Maybe people, their dad or their uncle or whoever it is, hey, it's a horrible time to buy. But when we really look at, okay, what are homes doing? Yeah, you're not going to get the 8 to 10% appreciation of 2021 where rates are 3%.
Yeah.
But things are still going to go up slowly over time.
Okay.
And when you're paying rent, right, you're paying that money that you're never going to get back
right.
at the end of the day. So even if your interest rate's a little bit higher, I just tell people, look, buy a little bit less house. Buy something that you're comfortable with so that you can at least get your foot in the door, get some equity saved over the next 5, 6, 7 years, and it can be a stepping stone into the next house.
Right. You can take that equity out, apply it to another home, keep it, maybe make it a rental. There's so many opportunities.
Yes. And I think that's what people get stuck on is I want the nicest house right now. Well, let's just get you into the game first.
Yeah.
And then once you're into it, then we can work on getting you something nicer in the next few years as you have some equity saved up.
Yeah. Oh, that's pretty good. So what does a 0.5%, I know you don't have a calculator in front of you, but if you took a $400,000 home and we're at 6.5% and somebody's waiting for a 6%, a 0.5% to come down before they get out there, how much is it really going to make a difference in their payment?
That's a great question. We're going through this right now with refinances because people are refinancing now, especially if they had above a 7%, and they're thinking, oh, I'm going to save $1,000 or something crazy. We give them, okay, here's your loan estimate. It's a 1% difference. You're saving about $200, $250.
Okay.
And they're like, what?
Yeah.
I thought it was going to be $1,000. No, it's barely anything. So, long term, of course, it's good, but 0.5% is going to change the payment depending on the loan amount by $100 to $150 usually.
Okay.
Not by much.
So we know that, okay, if you get in today at 6.5%, okay, and just say interest rates are going to fall another percent, that's a good time for somebody to refi, correct? What would be the?
I usually say like a full percent, unless you have a really big loan amount. If you have a big loan amount, 0.5% makes sense sometimes because it will make a big difference.
Okay.
So I have somebody doing 0.5% right now, but they're saving $500 a month.
Oh.
And with no points, nothing like that, right?
Mm-hmm.
Yeah.
Okay, that's good. So I didn't even ask you. Who do you work for? Do you own your own brokerage firm?
Yeah. So I own my own net branch here.
Okay. What's your company called?
Vero Mortgage.
Vero Mortgage. Okay.
Yeah. So Jeremy Engel is like my mentor and business partner, and he started it, and he's doing his own thing in Visalia, and I'm doing my own thing in Fresno, basically.
Okay. Yeah. And so, how's your business? Is your business growing? How many lenders do you guys have? How does that all look and work for you?
Yeah, so I've stayed pretty solo. I haven't really recruited a ton of loan officers. I've really been focused on my own production, and we're definitely like seeing these numbers actually impressed me with how much we've grown because we're doing much more this year than we did last year, which means that we've grown because obviously the market hasn't grown that much, which means that we've grown our market share. So yeah, we've grown. I do have a few loan officers. I have 4 or 5 loan officers that work for me that do their own thing too.
Okay.
So,
and since you brought that up, I don't know, I can provide you this information, but it's really interesting when you look at the California housing market that in 2021, there were over 444,000 homes sold in California. And after that, it has trickled down now to 2022 was 343,000, 257,000, 2024, 269. This year, they're estimating only 269,000 units to be sold in California.
That's crazy.
It has fallen down.
And what's crazy is the 2026, I think with rates coming down, everybody's kind of expecting that it's going to boom, and they don't think so.
They're saying 274.
So just a little bit more.
Yeah. So it's really interesting about that. And in California, course, Fresno's a lot different. Our median price range in Fresno is about 425. But when you look at the median price in California, you would think with the units coming down that the values would come down, right? Because we're having less. That means people are, whatever's going on here, negotiating. In 2021, the median price range was $784,000 in California. It has done nothing but increase. 2024, we were at 865,000 median price range in California.
Wow.
This year, they're estimating to be 873,000. So about another 8,000 higher. And in 2026, they're anticipating California to be at a median price range of 905,000. Wow. So what's interesting, and what I'm trying to relate to you, is values were just jumping up when in 2021 because everybody was trying to buy a home, right? Mm-hmm. Because they felt that the values were going up, they were never going to end. Values have plateaued or increased a little bit, mm-hmm. but our sales are coming down, mm-hmm. and yet our values.
Because they bought up all the market in 2021.
Yeah.
There's nothing left hardly.
Well, and then the other thing we talked about before we started this was that the average population in the state or in the United States is 65% of the population owns a home in states. California is only 55%. We have less population owning a home in California because we don't have enough housing to meet the needs of our population. And so the values are still going up. So if you're waiting for values to come down, it's not predicted.
Yeah.
If you're waiting for interest rates to come down, what's going to happen when those rates come down? What is going to happen when the rates come down?
The demand's going to shoot up and you're going to be competing with multiple offers.
Yeah.
Again, I mean, if it goes down to 5 or 4, if it goes down to 4, we're going to be super busy.
Yeah. So. And we don't even know if it will get there.
Right.
And again, when the market is slowed down like it is now, you can negotiate those closing costs, hopefully with a seller. In our team meeting, I think it was either 40 to 46% of the offers coming were being negotiated with closing costs paid by the seller right now.
I would, yeah.
When the market shifts, and the markets will shift, and it shifts to a lower interest rate, say goodbye to those credits. Seller's not going to need to because there's going to be plenty of buyers. So that's what I think today buyers should be getting off that fence and coming out and talking to our lenders and getting pre-approved.
100%. Yeah. No, I think right now, especially if you're a buyer that's in the situation where you need down payment assistance or a grant, this is really your time.
Yeah.
This is your time to shine because if rates come down and the demand comes up, you're going to have trouble getting those closing costs covered.
Yeah. So. I have several listings that they're below the median price right now. They're between $290 and $330. Mm-hmm. I will tell you almost every one of those offers, they're asking for seller credits. You know,
how do your sellers feel about that right now?
That's interesting. They're still living in 2021.
Yeah.
They don't want to give the credits and they're squeezing a little bit, but it all comes down to motivation. If a seller has to sell because maybe they're being transferred, family situations have changed, they may be more apt to pay those closing costs. Mm-hmm. But if it's a seller who's selling maybe investment property where he doesn't have to, I see those sellers kind of clamping down and saying, no, I don't have to sell it, so I'm not going to offer or give that credit. So it's all negotiable, as we know. So.
Yeah. We have a client that's put an offer on a home, and it's been listed at like 900 for like over 150 days. And the client put in an offer at like 800, which is low for sure. But when you've been on the market for that long and the house needs a lot of work, it's very outdated.
Yeah.
Kind of think, man, maybe the seller should take it.
Yeah.
And just move on.
Yeah.
So.
Well, sellers, there's a grieving process that goes along with having to reduce your price. One of them is denial that, no, I don't need to. There's plenty of buyers around, or, hey, somebody's going to come in and offer me that $50,000 over because I priced it accordingly, maybe, and then there's anger. They get frustrated. They get frustrated with the agent because,
Right.
And then they gotta come to reality. They gotta start, deciding what they're going to lower it to. So there's 5 actual feelings of grieving that a seller goes through until they come to acceptance and say, hey, if I want to sell, I need to get that price down.
Mm-hmm.
So anyway, with that saying, I'm just curious, do you I'm assuming you own your own home. I know you own your own home.
Yeah.
Have you invested on investment properties? Have you bought investment properties?
Yeah. I bought quite a few over the last couple of years.
How were you able to do that? How were you able to afford it?
I mean, my own funds, and then also, using other people's money, and we get into creative financing and all that type of stuff.
So you know how to do creative financing. You can help other people do that too?
Oh, absolutely, yeah. So I mean, I purchased properties off market where it's wholesale and it needs a lot of work, and we go in, we gut the whole thing, we replace the electrical and plumbing and everything, insulation.
Are you flipping them or are you holding them?
I'm holding everything.
Okay,
Yeah.
so you're holding. So how many doors do you own?
30 right now.
Oh my goodness. So this young man is what, 33 years old?
33. Yeah.
33, and you own 30 homes.
Yeah, 30 doors.
30 doors.
Yeah.
Okay.
I think maybe it's like 15 or 16 homes.
Properties.
Yeah, properties.
So some of them are multifamily.
Yeah, some of them are like I have a couple 3 units, a 5 unit,
Yeah.
So.
How do you feel about owning that many?
Stressed out.
No stress.
No,
You're supposed to say, "Oh, I feel blessed. It's the best thing ever."
Yeah. I mean, so one thing I've learned, and trying to figure out how to say this. My business partner, Jeremy, he's my mentor, right? When I first got into it, he goes, dude, you don't gotta go fast. Go slow, take your time, buy the right property. He goes, do the right work on it. But me, I want to just do it right away. I want this many doors right away. And that's what a lot of investors get into. And it's a little bit of a trap, I think, is, more doors equals better. It's not true, right? Because then you start cutting corners. Oh, I'm just going to get this one. I'm just going to do some lipstick and throw somebody in there. Then this one has a plumbing problem. This one has this problem. So I went through that where I bought a bunch and they had some problems on it. And, now I'm a little bit more conservative, and I make sure I do all the work. Like a property I have right now in Clovis, I'm doing everything. I probably could have slapped paint on it and just put a tenant in there.
When you say you're doing everything yourself, or you're hiring?
No, I'm hiring it out, but I'm doing new electrical, I'm doing new plumbing, I'm doing a new roof, I'm doing new stucco, I'm doing new drywall, I'm doing everything, new kitchen, so that when I put a tenant in there, 1, I'm going to get higher rents, and 2, I'm going to have a lot less headaches because all of my big capital expenditures are going to be taken care of. And the trap I think a lot of investors get into is they try to buy so many at once, and then they get left out to dry when they have a bunch of capital expenditures. And if you can't weather that storm, you're going to be in a world of hurt. So my mindset has changed a little bit now. I'm looking more for stuff that's in a better side of town. I can do fully, and I won't have any issues on it. There's going to be some issues, but try to alleviate the issues so I don't.
Okay. Well, before we close here, I want to ask you, because I've learned to be a big goal. To set my goals to help me grow my business. And I'm assuming you have goals too. So you have 30 homes. What would be your goal for next 5 years? I know you're taking it slow if it works out, but what would you like to see yourself, first of all, with owning investment properties? How many do you have a cap? What does that look like, that goal?
Yeah, this sounds really bad, I guess, but I used to think, okay, I want 100 doors. That was my mindset. It's changed a lot. Now I'm like, if I had all these 30 doors paid off, I would be retired if I want, So I think if the right homes come, I'll jump on that opportunity. Definitely, and I'll buy it. But I would like to have 100 doors over the next, 10 years or whatever, and slowly do it, but do it the right way and make sure it's the right property. And if it's not the right property, I don't buy it.
Okay. So, and then with you're doing loans. What is your goal? What do you want to look like? How many loans would you like to do a month?
Yeah. So right now I'm doing about 20 loans a month. I would like to be doing 30 myself with a team, and then have my own loan officers that I'm coaching and mentoring. I'm actually finding more enjoyment in that now than even doing my own production, is helping others do their production. Okay. So I'm kind of looking, for some people that I can mentor and help them grow up in the business.
Okay. Personal goals. What about personal goals? You got a wife, you got 2 sons, you want 2, 4, 6 more kids?
We're all done having kids. I wanted more, but hey, it's all good. It's all good. Right. So
what about some personal goals?
I'm really, really committed to jiu-jitsu, and so I like personal is, I like to work towards, I don't want to say black belt, I just want to work towards improving and getting better in that way. And then also just being the best dad I can be, like getting my kids to places and doing things with them and making sure I'm super present with them.
Yeah.
So that would be like my 2 personal goals.
What keeps you on track with goals? Just general. I'm just asking, to be general. What keeps you on track? Where is your mindset? Knowing you want to, let's just say, have 100 house doors in 10 years, the health, the being the best dad. What works for you? Everybody has something different. What works for you to keep your mindset on your goals and keep you going? Because we know life is tough. We're gonna have falls and get up, but what keeps you on track?
I think this is gonna sound cliche, but God won, right? Number one, and then 2, jiu-jitsu has helped have an outlet, like versus just because what I was doing before is just working, and I kind of became burnout. So now having an outlet that I can do something else, and like when I'm on the mat and my phone's away, I can't even answer anybody. So I'm completely for that hour and a half just locked in on this.
Yeah. When you started your career, was it about making the most money you could make, the quickest and the fastest and the hardest? Did you do that?
I don't think it was always about money. I'm very competitive. It was more about winning. Like I wanted to be number one. I wanted to be the best.
Okay.
That was my mindset back then.
Okay.
And so.
Yeah, I've never had that mindset. I mean, I want to be one of the top agents, let's just say, but I've never said, I'm going to go after the number one spot. Maybe I should have. I don't know. But I'm happy where I'm at and what God has given me. I'm very, very happy with that. So, okay. So how would people find you? Where can we go on your social media platforms, or how can I find you if I want to talk to you further about financing and just maybe some questions?
Yeah, you can just find me on Instagram at Corbin Claypool, just my first and last name.
Okay.
And YouTube, same thing.
Okay, so you're on those, that's where we'll find you, right?
Yeah, Instagram, Facebook, YouTube are the main ones.
Okay, and you can find me at Greg Kosref on Instagram and YouTube, and I would love if you guys would follow me on Instagram and YouTube. We've been building our platform, and I'm assuming you'd love people to follow you too, right?
Yeah, absolutely.
Okay, very good. Anything you want to say before we?
No, just thank you for having me on. This was a lot of fun.
Yeah, it was. I love getting to know people, to see what clicks in their mind and what doesn't click. And what is, last thing, since you said that, what do you think your strongest attribute is about you?
Oh man, that's a hard question. I don't know.
You got a bunch of them?
No.
What about the weakest?
The weakest.
We're gonna have to do this again if you can't come up with it, and we'll have to figure it out.
Give me a couple seconds, as long as we can.
My strongest, I'm just gonna put it out there. I wasn't going to, but since I have to give you a couple seconds.
Yeah.
My strongest would be encouragement.
Okay.
My strongest attribute is to encourage others. And it's funny because I get encouragement when I encourage others. There was a time where I needed encouragement. I was giving everybody encouragement. And I prayed about it. I says, God, I need encouragement. He says, you need encouragement? Go give it. And so there's times I need it and I already know the answer. Okay, go give it. So that's one of my strongest. And my weakest is resentment, or not resentment. No, rejection. I got the wrong word. Rejection is a big button for me. I hate being rejected, whether it's about my family, my clients. That sends me down.
Oh, okay. No, you made
got
it click for me. Yeah, I think my weakest is probably I'm an overthinker.
Overthinker.
Oh yeah, about like just anything. It could be like overthinking anything.
Yeah.
Work, business, family stuff, friend stuff. So I can be an overthinker, and I think my strongest attribute, I'd say, is probably my discipline. Like I'm pretty locked in. I'm not perfect, but that's really what's helped me in the last 7 years is just being consistent. I'm super consistent.
Yeah, consistency is
everything.
It is.
So you can have a great week, but you got to tie those weeks together over and over and over again, So.
Yeah. Well, that's pretty cool.
Yeah.
You don't hear people saying that they're consistent very often, and disciplined. So I appreciate it. Well, thank you very, very much.
I appreciate it. That was
fun,
man. So
have a good day. And hey, This is the Bearded Realtor. And again, follow me on YouTube if you haven't, and Instagram. And if there's anything I can help in the real estate industry with you buying and selling real estate, buying investment properties, please get a hold of me. I'd love to help you. Have a blessed day. Talk to you soon.